Hello, everybody. Welcome to Annual Report Analysis. Topic number 5, Dividends and Buybacks. Today's case study is Home Depot. If you remember, in topic number 1, we discussed fuel cell energy. So, in that topic, it was very simple. We were trying to figure out how much the company has earned since it for its lifetime. Basically, since it went public, we figured out that, and that was from the year 1997. So we were able to look at the balance sheet at the bottom in the stockholders' equity, and we were able to do that. But here, in some company, and like in fact many companies, which pay dividend and which pay dividends or have buybacks, we cannot do that because they are paying back also. So we have to consider that. So let me show you what I mean by that. So again, we went to the sec.gov and looked up for Home Depot's 10K reports. Okay, so here, if you see, Home Depot's 10K reports are available since 1994. So I went and pulled all those reports, and I started looking at every year's stockholders' equity statement. So in the stockholders' equity, which is shown here at the bottom, change in stockholders' equity. Here you can see what is the paid in capital, which we had discussed in topic number 1 as the money that has come in, and what is the retained earnings. Now the retained earnings here, you can see it was $51.7 billion at the beginning of the fiscal year 2020. Then it earned that much, then it has paid back dividend. So what happens is, when a company is paying back dividends, this number will not give you, the retained earnings will not give you all the picture. So we have to go and figure out each year how much the company has earned, how much it has given the dividends. And also same thing, it goes with the stock buybacks. That means how much amount of the shares they are bought back. Okay, and that will give us the real picture. So like that, I went and I literally went around. I analyzed each year's stockholders equity from 2020 till the year 1994 here. Okay, so this is the this is the 1994. So till this year, for almost 26 years, I analyzed that, and I brought all that amounts here. So here you can see, this basically shows how much the company earned and how much it paid as dividend. Okay, so 2020 it earned $12.8 billion. Out of that, it paid $6.4 billion, and it only bought back 597 million of its shares because of COVID pandemic, and it wanted to conserve cash now. But pretty much all other years, if you see, it is pretty much most of its profit. In fact, more than what it earned. It is, if you do the math, like 2019, it earned $11.2 billion. It paid $5.9 billion dividend, and also it bought back shares worth 7 billion. So this extra, whatever you are seeing, it is able to do that by borrowing money. Now, obviously, we'll discuss in our future sessions when we are discussing strength of balance sheet, like when it actually makes sense to borrow money and do this thing, and when it does not make sense. So obviously, Home Depot, what it's doing, it is the correct thing because its operations are very efficient and its cash flow generation is very high, and its capital investment needs are pretty low. So that's why it's able to do that. We'll explain all those terms later on. But in this session, just keep focus on the net income and dividends and buyback. Okay. So if you see, I've put all these amounts for all these years, and the company has pretty much been profitable all this time. And if you see, its profit keeps growing in a very steady pace. It was 604 million in 1994, 731 million in 95, 937 million in 1996, 1.1 billion. So if you see here, it is steadily growing, and it keeps paying back its investors. So in last 26 years, it has earned $128 billion. Out of that, it has paid back $47 billion. And it has also bought back stock worth 90 billion. So obviously the reason it was able to do more than what it earned is because it was able to borrow at a very low cost and still use that for its buybacks. So this is just a small example that showcases the dividends and buyback. So basically, if you are doing the analysis of how much it has earned, you will take this number and you will be able to figure out that it has earned $128 billion overall. Okay. So now let's kind of do a little preview how the market overall has like what has been their reaction. So this is the stock price of the company, and pretty much I pulled up so we can see from the year 1994. Okay, so here I've just put little like a table here. So in Jan 1994 the stock was $9. Jan 99 it became $40. Jan 2004 it became $35. Jan 2009, it became $22. So obviously, all these decreases were because the first decade was pretty slow. Then you see Jan 2014, it became $77. Jan 2019, $184, and Jan 2021, $270. So if you see and if you compare with S&P 500, here are the S&P 500 index numbers just for reference. Home Depot in these 26 years has returned 3014% return. And if you see compared to S&P 500 of only 718%. And obviously each of these 5-year time periods also, so this growth is 365% from 94 to 99, and it lost 12% from 99 to 2004, 39% from 2004 to 2009. Then again it grew 257% 2009 to 2014, 139% from 2014 to 2019, and 47% from 2019 to 2021. Pretty much all these 5-year periods also it has beaten the S&P 500 index. Other than from 2004 to 2009, it lost 39%, whereas S&P 500 lost 8%, mostly because of the housing crisis. It got a little slow, but overall, it has done phenomenal return. So just to give you perspective, more than 80% of fund managers are not able to beat S&P 500 index. Now look at this, interesting thing. If someone would have just invested in Home Depot, they would have beaten S&P 500 pretty much in every 5-year period, other than this brief period. Pretty much every 5-year period for 26 years, they would have beaten, plus also overall. So here, obviously, the focus is not to discuss about stock investments, but I just wanted to give everyone a little preview, like how much the dividends and buyback are important. They are like extremely important, especially if a company is doing well and it's able to return the money. So the logic is very simple, right? You are able to grow, plus also in the same time you are able to return money to the stockholders. So that's an amazing thing, right? So the market really likes that in long run, and it really rewards that stock in a healthy way, which we have seen here. So that's what was the focus of this session, just to give you how one can go and figure out the dividends buyback and figure out overall how much the company has earned and how much it has given back in dividends and buyback. So that's it for today. So hope you found this session useful. Again, if you have any questions, please email me at annualreportanalysis@gmail.com. And also you can visit our blog where you can find links to the other videos and other interesting information. Thanks and have a nice day.